Already with us, we have been joined by Mr. Amitabh Kant, CEO, Niti Aayog, and I invite Mr. Kochhar to kindly take over from here.
I cannot see Amitabh. Is video on? Mr. Kant is there?
Let me check. He is there. He's logged in, but his video is switched off. His video is on.
Hello. Hello.
Yes, we can hear. We can hear.
Yeah. So CEO sir is busy on the phone call, so he will join in 5 to 10 minutes.
Okay.
Okay. Fair enough. So, Gulsharan, do we have any more orders of merit left?
No, that round got over. Then we have the next one scheduled at later in the evening at 18:20.
So maybe welcome Deepshika ji. You're on mute.
Yeah, I will just unmute. How are you, sir?
Very well. So do you think we could start and then maybe we could just pause as when Amitabh gets the time to come in, he can give his keynote there. There's no point in just...
They said he's joining in 5 minutes, so we won't, I mean, whatever suits.
Okay, fair enough. So...
is everyone here from the panel?
Gulsharan,
I don't see Dr.
Rajat is there?
I don't see Dr. Kathuria. Dr. Palit is here. Hi, sir.
Let me find out. Let me call up Rajat.
So anyway, in the meanwhile, let me take the opportunity to tell you, this is the second public policy forum that we're doing. It's the 70th summit, essentially. It was exactly a year and a week back that we had the first public policy summit, and boy, has the world changed. While the world has changed because of COVID and a lot of other things, the sum and substance of what was being discussed as public policy forum 1 year back, specifically in terms of global trade, has not substantially changed. In the sense that, from our platform, we were already, the consensus last time was that we have to relook at things like WTO. We have to look at, stop looking at multilateral trade agreements and, revisit some of these regional agreements that we have. And, this economic nationalism seems to have gained currency very, very substantially during COVID. And the situation there is getting more polarized. Similarly, the debate on personal data protection is shriller than ever. The threat to democracy, and with the PDB bill coming in. So what we have done is we partnered with some of the best think tanks, and it has become like an annual jamboree of all the think tanks in public policy and all the educational institutions that are leading in public policy to come together and chart the path forward. And we are really glad that RIS has organized this particular panel with us. There Rajat is. Rajat had organized the personal data protection panel for us. In the morning, we had a panel organized with cuts. We had the Prime Minister's office, Mr. Amajit Sinha, advisor to PM, talking about inclusive growth and the agenda moving forward and how rural India has fared during COVID. Immediately after this, we also have a panel on health, which is the biggest issue, whether we should go private sector, whether we should go public sector. So there's a pretty rich smorgasbord of let's say options that we have in terms of public policy, and it's been very exciting. Rajat, I was giving the background on the public policy forum itself while we wait for Mr. Amitabh Kant. So would you like to share your experience? This is the second year you partnered with us, and how's it been? And I was mentioning that I was joking that the issues we were discussing on global trade are exactly the same. All other policies issues may have changed, but global trade is still the same, what it was 1 year back.
Yes, thanks, Samir. Indeed. I think, first of all, it's been a privilege to interact with you. I think the convening power, I used to think that the convening power of ICRIER is very good and very strong, but I think the convening power of SKOCH is equally, if not more profound. And I found the engagements at the SKOCH Forum extremely good, stimulating, and rich, and you managed to get all the stalwarts in one place. And I remember last year at the Constitution Club when I spoke, also there were a number of stalwarts and key policy makers on those platforms, and the discussions have always been well attended. So it's been really nice to collaborate and partner with SKOCH. So thank you, Samir, for that. And one note about public policy in India, and I think Amitabh Kant will talk about this much more. And I see Amitendu, my old friend who used to be at ICRIER, he's also there. And of course, Sachin. A thing about public policy in India and my experience with public policy in ICRIER especially has been that the issues don't change. If you take trade, if you take telecom, if you take data, well, is relatively new. But if you take, for example, telecom, and you look at the issues 5 years ago, you will say the issues are the same. You need to get spectrum rationalization done. You need to get the auctions right. You need to be able to spread broadband in rural areas. We started this in 2011. In 2020, we are saying exactly the same thing. We need to get fiber rollout to the Gram Panchayats. So issues don't change. In trade, we are talking about the same things. Again, we need to engage more in FTAs, but we need to do it better. We need to revive WTO, but we need to revive it in an inclusive manner. And we have been talking about these issues for a long, long time. I'd just like to make 2 points here, Samir, 2 points of interest for India. One is that public policy in India cannot be that I've done this and I move on, which is that I've written this paper up, I've done this dissemination, and I'm not going to do it again. Policy in India needs to be hammered over and over and over again so that the message goes through. And I know Mr. Amitabh Kant has come. And the second point is, how do you get policy change in India? Do you do it internally first and then engage internationally? Or would you want to liberalize internationally and then say, okay, now I have to do domestic reform to take the full benefit of it? I mean, these are two things that we could discuss later. I know Amitabh Kant is here. Hello, good afternoon, Mr. Kant. Back to you, Samir.
Yeah. Welcome, Mr. Amitabh Kant. As I was mentioning, it's exactly a year and a week since we last had you on our platform, which was last year's Public Policy Forum. It's a completely different world. Issues are about the same when it comes to public policy. And one thing that you had commented last time was that no one comes for a conference at 9 o'clock in the morning, and you were surprised to see a full house in the auditorium in India Habitat Center. I'm pleased to tell you that this is a 12-hour seminar which is online, unheard of practically. And since morning, we have almost 800 people who've been logged in, and hopefully we'll see the 12 hours. So welcome once again, sir. Last year, you would recall that during this time, the RCEP topic was very hot, and whether we should do bilaterals, whether we should do free trade agreements, whether we should revisit WTO. I think with the advent of COVID, the whole thing has become far more pronounced, and economic nationalism is far more pronounced across the country. And we would love to hear from you as to where do you think India's trade imperatives lie in the new global order. You're on mute, so you'll have to unmute yourself. Sir, you're still on mute.
Mr. Kant, you're on mute, sir.
Thank you, Samir. It's a pleasure being with you. So the global economy still faces the looming uncertainty. Global growth is estimated to be around minus 4.4 in 2020 and expected to bounce back to 5.5% in 2021. While the world is still grappling with the unique coronavirus, we've managed to remove restrictions on the economic activity, thereby giving a head start to global growth early on. And now with vaccination drive on, and India having launched its vaccination today, in due course, we should see a full impetus to economic activity. In India, the economic activity has actually bounced back tremendously well after the sharp contraction in GDP of 23.9% year on year in the June 20 quarter. Standing in the last quarter of financial year 21, the previous few months have seen a sharp recovery in various segments of the economy. The GDP numbers for the last quarter beat all market estimates, and positive year-on-year growth in manufacturing particularly boded well for the quicker recovery. PMI for both manufacturing and services have been inching up continuously for the past few months and were at 56.4 and 52.3 for December 20. The advanced estimates for real GDP growth for financial year 21 came at minus 7.7, which is a vast improvement from the estimates in the market back in June 20 or even in September 20. The government and the RBI have been proactively monitoring the economic activity. During and after the lockdown, the government has come out with various measures to not just stimulate near-term economic activity, but also to provide long-term strength to the economic fundamentals. The liquidity support from the RBI has also been instrumental in lending the financial system the required strength it needed to sail through the tough times. The festive season retail sales have also been impressive. According to the market estimates, India's real GDP growth could very well be at 10 to 12% in financial year 22, but that will be primarily because of the low base. That, however, will also provide the government an opportunity to push for growth, enhancing spending on infrastructure and other related sectors, as the incremental impact on debt to GDP ratio is lower when growth is high. For a long period of sustained growth, we need to use this time to bring about structural reforms in the economy. The government has brought many such reforms, such as those related to labor regulations, agriculture, opening up coal mining, commercial mining, definition of MSMEs, etc. This could provide strength to our fundamentals and bring India back to the pre-COVID growth trajectory much faster. Our objective to achieve a $5 trillion in the next 5 or a $10 trillion in the next 10 years would be well served with these structural changes. And they should really provide the impetus to growth. But given the global uncertainty, we will need strategies for the future. We will need to assess the prospects for the global economy and make policy choices accordingly. Trade will be an important aspect of this policy paradigm. Post the global financial crisis, global trade to GDP ratio has flattened out. In the recent years, it has got affected further with the tension between the two largest economies in the world. The global trade scenario depends much on the geopolitical conditions and China's policies going forward. Here in India, we have resolved to make Indian industries globally competitive and build India as an economic powerhouse. For this, trade holds particular importance. While with the PLI scheme, we aim to make further inroads into global value chains for manufacturing and industry, India also has a competitive strength and advantage when it comes to services. India has proved its strength in providing world-class services when it comes to IT-related services and digital financial services, among others. Therefore, it is imperative that we put greater thrust on services as well to increase our share in global trade. It is also important for India to forge stronger, newer strategic alliances in global economic order, which can take different directions from here. The global economic order has been undergoing a major transformation since many years now, and its consequences have only become apparent very recently. In such a scenario, India will play a crucial role as it is one of the fastest growing large economies and will be instrumental in determining the arrows of global trade going forward. To do that, we need better alliances with strategic partners so that both can mutually benefit from the trade and investments that will ensue. We need to increase our trade for faster economic growth and also to make our industries more competitive. Global supply chains will relocate. Many American and European companies are looking for alternative destinations, or at least reducing their risks they have in China. And therefore, it is imperative that India makes not only for India, but for the world. And we will need to improve the quality of our products further to penetrate global markets. So our priority should be to pick strategic sectors, strategic partners, and build India's participation in global value chains for faster economic revival and greater economic prosperity going forward. I'm a great believer in trade, and my belief is that it is not possible for India to grow at high rates of 8 to 9% per annum year after year for the next 3 decades or more without increasing its share in global trade. India's share is at a very low percentage of 2%. And therefore, this is a huge, huge opportunity for India really to capture and penetrate global markets and enhance its share in global trade. Thank you.
Thank you so much, Amitabh-ji. Any questions anyone has for Mr. Kant? That includes the panel. So well, I suppose we move on with the panel. Thank you so much, Amitabh-ji. We have Deepshika.
I think Subhamoy was asking a question.
Yeah, Shubhamoy, you're asking a question?
Not question. I just was very impressed with Mr. Kant's that point about larger integration in the global economy, and I think that's a very wise point that you've raised. So I was just looking at like what is the, as you say, that there's a global economy is at an inflection point, and there's a reason to rework our alliances and look at what are the issues that we need to look at. So if you could just elaborate a bit on that.
So if you go back in history and look from World War II onwards, no country in the world, whether it was Japan, Korea, Taiwan, China, no country in the world has grown only on the strength of its domestic market. Every single country has penetrated global markets. And this has required the ability to be globally competitive. Otherwise, you will never be a part of the global supply chain. And this would require us to do a lot of structural reforms have recently been carried out. And this will make us competitive in several areas. But then there are two critical areas. One is the cost of power to the industries, which still remains at a higher rate in India, because India is probably the only country in the world where domestic consumers, households get power at lower rate than industries, whereas world over bulk consumers get power at a much lower rate. And this needs to be altered. And this will only happen when discoms are restructured by the state governments. So a lot of reforms and structural reforms have been carried out by the central government. There's a need for structural reforms to be carried out by the state governments. And you need at least about 7-8 states to grow at high rates for a long period of time. Secondly, in India, logistic costs are very high because over the years, the railway passenger fares have remained static and the freight fares have increased. And this has led actually to a lot of goods which should normally move through railways having shifted to roads. And India is probably the only country in the world where 75% of the goods are carried by roads and not by railways. And railway share in logistics has been shrinking. We need to set this right simply because the cost of pollution would be very high and the cost of logistics cost is very high. So we need to fix both the power costs and the logistic costs right. These are very critical. And this will enable you to penetrate global supply chains much quicker, much faster. But the PLI scheme has tried to compensate you on this differential. And I think at least in these 10 sectors, strategic sectors that we have identified, we must aim to become global supply champions. So my view is that when post-World War II, Japan identified only 5 sectors. We've identified 10. But at least in these 10 sectors, we should look at size and scale of manufacturing. And unless you don't become a large manufacturer and have few global champions, it will be very difficult to penetrate global markets. And therefore, now with labor reforms and now with contract, Apprenticeship Act and many other things that have happened, we should be able to enhance the size and scale of our manufacturing. And secondly, we should clearly have strategic alliances. If we feel that RCEP is complex because of China being there, we should look at Europe, and which is our largest trading partner and our largest investment partner. And let me also say that no country in the world has grown without penetrating American markets. And therefore, it's very necessary for India to work with America and see that we become a major exporting nation as far as US is concerned. Thank you.
So would you say, going a bilateral free trade agreement route may be a better option for countries like UK and India?
I think we need to explore all options. We need to do a little more homework on this and explore all options. But trade has to be a very important component of our growth strategy.
Rajat, anything from you?
No, I couldn't agree with Mr. Amitabh Khan more. Absolutely, trade has to be an integral part of our growth strategy. And he said it, that no country has become globally competitive relying only on the domestic market alone. And I think this rhetoric we hear so much in India, that we have such a large domestic market and therefore we can grow on the back of a domestic market, it's just not going to be possible. Not only are we not going to be competitive, we just go back to 1970s and 80s. Companies sold low quality products at high prices to captive consumers. I mean, that's all you need to see. Of course, it doesn't mean you open up indiscriminately, but you can't have a protected domestic market and say, I'm going to become globally competitive. That's just not going to be possible. And of course, there is also the tyranny of the macroeconomic identity, which is at play here. which is that in case you want to grow and you invest more and your savings rates are high, who's going to buy the products that you're going to produce? You will have to rely on export markets. So both in order to be competitive and in order to escape from the tyranny of the macroeconomic identity, you have to be able to use the global market and become competitive. And of course, finally, I mean, what are the instruments to do that? What are the instruments to be able to become globally competitive? I mean, we know Japan used industrial policy. We know China used exchange rate policy really well to become globally competitive. We have to probably use a combination of all of these. But, you know, power, the PLI scheme, you know, look at exchange rates. Also, although exchange rates have a trade-off in terms of import prices, etc., but we have to look at all these strategies to be able to become globally competitive. But this is our time. This is India's time to engage globally. There is no other country that is ready to use globalization more than India is. You know, Cambodia, Vietnam, etc., are small. Africa could be the next region, but this is India's opportunity, and we must use this opportunity to become globalized.
Thank you so much, Rajat. Deepshika ji, would you like to share your perspective and then lead us into a structured discussion on this, as was the plan? You have to unmute.
So we can start with the discussion. You know, Mr. Kant has sort of really laid the backdrop for this discussion. You know, it is very clear that without trade, we cannot grow. But this whole apprehension which has been there within India and to engage with the world in terms of trade, we've seen that. But this year which has gone by, it's really changed dynamics for everybody globally, even trade. Three key events that happened this year. We know RCEP concluded, we stayed out, UK exited the European Union, and now the latest development that European Union has signed an investment agreement with China. Now, within this backdrop, what should be the key strategy for India going forward? I mean, if you look at the past, we have forged agreements not with countries which were our export markets, but our peers within the region. Whether the Look East policy, should we continue with that, or should our engagement widen more? So, with your permission, Mr. Kocher, should we start with the discussion or?
No, absolutely start with the discussion. It's now you are in charge. I'm only listening.
Okay. So thank you so much for having me today, and a very warm welcome to everybody who's attending this forum organized by SKOCH and RIS. So the theme today is, you know, is it time for India to examine and create prospects for free trade areas instead of regional trading agreements? Now, as I said, we've had a very big regional trading agreement in form of RCEP, which was concluded last year. We decided we had reservations, we had apprehensions about joining, we have stayed out. There was a lot of commentary on whether this was good and that we will get isolated and so on. And the debate is back on the table with China now forging an agreement with the European Union. And as we know, we have been in talks with the European Union since many years. And after 2013, we've never really engaged so very actively with the European Union to have an agreement. So what should India's strategy be going forward? So we have a very enlightened panel today with us here. Let me just introduce them one by one. We have with us Dr. Rajat Kathuria. He's the Director and Chief Executive at ICRIER, and he has over 20 years of experience in teaching and 15 years of experience in economic policy. He's worked with the World Bank, and he's worked on assignments for a number of international organizations, including ADB, UNCTAD, ILO. We also have with us Dr. Amitendu Palit. He is a senior research fellow and research lead at Institute of South Asian Studies at National University of Singapore. He is an economist who specializes in international trade and investment, FTAs, supply chains, and cross-border flows. He sits on the World Economic Forum's Global Future Council on Trade and Investment, and he is also a senior research fellow at the Wong Center for Study of MNCs. We have Shubhamoy Bhattacharya ji. Shubhamoy began his career as a civil servant and then jumped onto media. He has over 22 years of experience in journalism across publications, including the one I represent here. He is currently a consulting editor for Business Standard, and his areas of interest include public policy, especially regulatory issues, finance, and urban development. He's also a consultant with research and information system for developing countries. He's authored books as also studies on SEZ and Land Acquisition Act. So over to you, panelists, and we will go one by one. Let me start with you, Dr. Kathuria. You can give an overview of the theme which we are talking about. All the panelists can speak for 5 minutes on the topic, and then we can start the discussion.
Thanks, Deepika. And very warm welcome to my good friend Amitendu and Shubhamoy. Thank you, Shubhamoy, for inviting me to this panel. And of course, thank you, Samir, as always. The topic is really wide, so let me make some general introductory remarks and happy to come back to specific questions. As I was saying, and as Mr. Kant was saying, India must engage globally, must engage in trade. And the reason I think has also been pointed out, and let me just spend a little bit of time talking of why we should engage globally, is that if you recall the era of the 70s and 80s, in India, nobody wanted to buy Indian products because they were of real poor quality, and domestic consumers also suffered because there was very poor quality that was being produced. And part of the reason was that we had very, very high tariffs at the borders, and we, of course, had no sort of regulatory reform within the country. 91 changed a lot of that. But one of the things that happened post 91, which is quite visible for everybody to see, whether it is in the automobile sector, whether it is in the telecommunications sector, pharmaceutical sector, and chemical sector, a lot of sectors that you see is there was a lot of competition that was introduced. We became a part of some of the global supply chains, not all, or at least some of the regional supply chains. And one of the great things that happened, which often goes unnoticed, was that our exports grew exponentially for some time. Indeed, between 2004 and 2008 and 9, I think our exports were growing at 20% dollar terms, which is very, very high. And the reason the exports were growing at that pace was because we were able to import very efficiently, add value. We were getting good quality products, importing, adding value, and exporting. It wasn't that we were doing everything ourselves. We were becoming part of production networks. Of course, there's a long way to go. But the short point that I wish to make is, in order to export, you needed to liberalize the import regime. In order to export competitively, you needed to liberalize the import regime, which we actually did. There's a Lerner symmetry theorem that trade theorists are familiar with. So if you have import tariffs, then you're also going to have an export tax. And I think that's the framework, that's the logic of having sort of greater global engagement. It's not that we don't have comparative advantage. I mean, every country has comparative advantage in something or the other. And Paul Samuelson used to say jokingly sometimes that the only non-trivial yet true thing about international economics and about economics in general is the law of comparative advantage. Even if you are a country which is seemingly dominated by another country in everything, that is, we have absolute advantage in nothing, we will have comparative advantage in something. And by using that comparative advantage, we can begin to export more. And I think we have to do that. We have to get our sort of idea about our vision of how we engage in international trade absolutely right if we want to go forward in the next 10 years. And the reason I'm saying that statement is often the policy discourse gets confounded as follows. We say that I'm running a current account deficit with Japan, I'm running a current account deficit with Korea, and I'm running a current account deficit. And the countries that you mentioned, Deepshika, we have trade agreements with our competitors, and therefore I must have done something wrong or not got enough market access. Maybe that's right, but to sort of condemn the agreements because we are running a current account deficit with one country, I think it needs a little more of analysis. We are not going to run current account surplus with the whole world or with every country. We are going to run current account surpluses with some, and we are going to run current account deficits with some other countries. But for the trajectory of growth that India is on today, running a current account deficit is not a sign of weakness. Countries run current account deficits because they're importing to develop, they're importing to invest, they're importing technology, and they're importing to grow in the future. There is nothing wrong in running current account deficit except that it shouldn't get out of control. So to say that I haven't been able to negotiate well because I'm running a current account deficit and haven't got enough market access needs to be reevaluated. Maybe you need to redo the negotiations and get more market access and services, which have been traditionally much more difficult. But it's not that India enjoys a comparative advantage in all services. Heaven's sake, no, India enjoys a comparative advantage in some services and not all services. And those are services that people have been reluctant, especially Mode 4, people have been reluctant to open up. But the point being that, we are running current account deficits, and there's no reason to say that, this is a bad trade agreement. We can negotiate it better, but don't run away from there because we are running current account deficit. The second point I want to make is that we will be able to engage much better internationally if we reform domestically. And I'm glad Mr. Khan talked about labor reform, electricity reform, and logistics reforms, etc. And I think we will be much more confident about being able to engage in international trade, provided we have domestic reform. But there's not just one route to success. It's not either or. You can't say, India is a multilateralist at heart, but given that where multilateralism is growing, we need to be a part of as many, regional agreements. We are not part of any, meaningful regional agreement. We need to be a part, we need to do bilateral agreements. And it is a point that Deepshika, you've raised, and I think Samir was raising as well, is that, we haven't done trade agreements with countries that we enjoy comparative advantage with in the traditional sense. Like, as Paul Krugman will say, the old idea of comparative advantage, countries like United States and India would, export, let's say, to use a crude analogy, labor-intensive products, and US would export technology-intensive products or capital-intensive products, and both countries would gain. And now we can sort of negotiate how much gain we would be able to get. That's, the traditional theory of comparative advantage that countries would gain from trading with one another. And those are the sort of trade agreements, we haven't had with East Asia, but those are the sort of trade agreements that we could have with the United States, and we could have with the European Union, and we could have with the UK, etc. And we are negotiating 18 trade agreements with so many countries, with Peru, with Israel, with Sri Lanka, etc. And I think we should not shy away from trade agreements, whether they are bilateral or regional. And of course, we should try and push multilateral. The focus has to be on trying to engage more, trying to become more international. Of course, these are difficult times, and we should do it sort of across the board. And two last points, Deepshika, if you would permit me, broad points, and happy to come back. One is that we have to increase capacity, institutional capacity in India to be able to do many bilateral agreements, many regional agreements simultaneously at the same time. There are trade-offs. If you're doing one, then you don't do another. so institutional capacity, and two, become more confident in the negotiations, in what we do. And one way to become more confident, I think, is to have engaged in domestic reform. I had said this before, but if we are able to do domestic reform, we'll be much more confident about the gains that we will get from trade. But I don't think there is any shying away from international engagement. In the 21st century, you will have some blips, but the secular path will be towards more openness, more liberalization, and we have to be more confident in engaging even at the WTO. Don't shy away from getting into plurilateral agreements, at least negotiating. In e-commerce, we've come away from the e-commerce agreement. At least go in there, be in the tent. Even if you don't want to sign it, be in the tent and voice your objections rather than say, I don't want to be a part of it. So I would say engage more at all levels, local, bilateral, regional, multilateral. That's the way forward for India.
Great. Thank you, Dr. Kathuria. Can I now come to you, Dr. Palak? Is it time for a reset for India, between free trade areas and RTAs? What should it look at?
Thank you so much. And let me first begin by thanking the Scotch Group for enabling me to participate in this fascinating conversation, something which I've really been learning from the time it began. Wonderful to see you, Rajat. Wonderful to see you, Shubamoy, and Happy New Year to all of you and to you as well, Ms. Sikalwan. I think we have covered a substantial amount of ground so far in the discussion between what we heard from Mr. Kant and what Rajat has eloquently illustrated. Now, on the back of what we have already heard, let me try to bring in three aspects to this conversation, which I think squarely addresses the core question: what kind of agreements? I think one of the things that we realize from the agreements that are being worked out across the world in terms of trade is that trade agreements are really not just trade agreements anymore. I think that's a very important point that we should note, because we have talked about preferential trade agreements, we have talked about free trade agreements, but today's free trade agreements, and when the term is used generically, actually cover a whole range of issues which go much, much beyond the pure question of goods crossing border or services crossing border, and they move into areas of very comprehensive domestic regulation. Like, say, for example, they deal with competition policy. They deal with how state-owned enterprises should procure. They deal with how the amount of data should be controlled, regulated across spaces. And in a large number of cases, they deal with labor and environment standards. To me, India's choice is not with respect to bilaterals or regionals. India's choice is with respect to what it should negotiate and with whom. Let me give an example. When it comes to a free trade agreement that's signed between Japan and the United Kingdom, that agreement is a comprehensive partnership agreement covering practically everything that can figure within the space of economic exchange between two countries. When we look at something like the Trans-Pacific Partnership, which has now become the comprehensive and progressive Trans-Pacific Partnership, let's note that it is not called an FTA. It's called a partnership. Even if we look at the RCEP, RCEP is popularly referred to as an FTA, but the RCEP has 36 chapters, out of which more than 70% of the chapters are dealing with issues which, to a traditional trade economist and the trade theories that we have learned as trade students, would look alien. For example, a subject like e-commerce, investment, non-tariff barriers, they all feature prominently in trade agreements. I think the choice for India has to be very specific with respect to the kind of issues that it wants to take up when it negotiates with other countries, and how much is it prepared to go in that regard. Let's say, for example, when one negotiates with the United States, Or say, for example, with the European Union, the United States and EU have set templates for negotiation. They're not going to deviate from those structures under any circumstances. The choice is for India to note how much of the template are they prepared or it is comfortable negotiating with. Let's say, for example, when it comes to negotiations with the European Union, we would probably be under the assumption that bulk of it will be only with tariffs. Well, tariffs is the pattern of negotiations that India has been traditionally familiar and involved with. But when it comes to negotiating, let's say, for example, the environmental standards, when it comes to negotiating data security, India is on a different ground altogether. Now, is it prepared to take on this much? If it is not, then there is no point in wasting negotiating time and space in a negotiation which is not going to move anywhere. And it is always possible to work out trade deals on the basis of very limited scope. Let's say, for example, there are countries across the world, Singapore being one of them, which has got into a digital economic partnership agreement with a few other countries, which just involves the cross-border flow of data. Now, data is central and integral to practically all transactions that are happening across the border these days. And it's probably important to see whether India might want to visualize this kind of a template. Now, the difficulty that India faces in this regard is that it is possible for countries with broadly similar identical regulatory structures and institutional capacities to take on larger deals with larger scope. For India, it is not that easy. It is not that the emerging markets are not trying that. Let's say, for example, the European Union Free Trade Agreement with Vietnam represents a very comprehensive set of issues. But let's say, for example, when one looks at Japan's agreement with India, the one that exists on the paper today, or the agreement that India has with Korea, much, much limited in scope. Even when one looks at the intellectual property chapters, mostly on the surface, not going very deep into the issue simply because India is not comfortable with it. Now, in that case, let me move on to my second point. How does one decide what to negotiate with whom? And this is obviously the question of identifying the market. Deepshika, you alluded to markets. Now, over here, I want to share an observation. What are markets? In India's case, what we see there is that market has been very important in trade negotiations, but it is the interest of the domestic market. It is not the foreign market whose access has mattered. On a relative weighted scale, if it had happened, India would not have abandoned RCEP. The simple logic from an exporter of being a part of an RCEP would have been that this gives me the opportunity to become part of rules of origin which enable us to mobilize raw materials and intermediates from across a huge geography and sell it back and forth across the geography at preferential rates. It is the other market which has become important, which is the domestic market. As a result of which, defending the domestic market gets greater weightage, as opposed to getting access to foreign markets, which is the exporter's interest. So when exporters' interests are secondary to the importer's interest or the domestic market interest, the entire perspective negotiation becomes different. Let me pick up an example in terms of identification. We know that gems and jewelry are a very important foreign exchange earning sector for India. And we also know that when it comes to traditional gems and jewelry, the gems and jewelry that Indian producers sell in the Western market are not sold in the Asia Pacific. What about fashion jewelry? What about recycled jewelry? Has the Indian industry ever championed this cause of getting access on the basis of a section of the jewelry industry, which can make revolutionary gains for the industry? And when we actually get to see who are the major markets for Indian gems and jewelry in the Western markets, we are surprised to see it's the Indian diaspora. And the Indian diaspora's character is changing. So my argument is that even the notion of markets is not static. It's changing, it's dynamic. And that is what exporters, countries, and national interests need to look at carefully. And this is where I'll come to my concluding point. The question about competitiveness. And I think Rajat alluded to this in the beginning as the core question. Do we liberalize before becoming competitive? Or do we first become competitive and liberalize? I think the answer to this is that let me put it this way. As of now, it seems that India has decided to look at agreements very carefully, with the assumption that Indian domestic industry must first become competitive. And then only it can engage aggressively in getting into trade agreements. I think there's one point which is being missed here. The search and pursuit of competitiveness is not limited to India alone. The entire world is trying to be competitive. So if today, in certain segments, India is less competitive than Vietnam, staying away of a free trade agreement with Vietnam is not the solution, because Vietnam is also increasing its competitiveness. And this is a dynamic exercise. This is not a static exercise. I cannot expect that in 5 years' time, my industry will become that much competitive as Vietnam was when I began the exercise for competitiveness. By that time, the competitiveness ladder would have been scaled further. Production modules would change. Just-in-time supply chains would come in. New characteristics would emerge in production, and borders would evaporate faster. So I think today, one of the very important lessons that COVID-19 leaves with all of us is that countries did resort to export restrictions and trade restrictions because they were all very careful about the fact that domestic populations and resident populations must be addressed to when it comes to COVID-related supplies. But ultimately, today it has again become clear at the end of it that no country is self-sufficient in everything. Countries require access to a large number of products, and that's where it is important to engage. Whether one engages it through a bilateral agreement, whether it is happening through a group of countries is immaterial. The important question is that one needs to engage, and that engagement can be simultaneous and multifarious across a spectrum of objectives. Thank you so much.
Shumoy?
We have maybe 5 minutes to conclude, Deepshikha ji.
Right.
Oh.
And I think it's much more fascinating to listen to Dr. Rajat Kathuria and Dr. Amitabh Palit. We talk among ourselves quite a lot. So why don't we use the time to listen to them a bit more, rather than me giving my comments, which in any case wouldn't be add anything much more.
Sure.
I've just asked. Yeah, please.
No, were you saying something?
I was just asking them that could they look at the political reason why no political party in India ever supports a trade agreement?
I always follow Rajat's example. So Rajat, you go first, I will come in later.
No, I think, Shubhamay, that question, there is often, we say in India that you reform either by stealth or you reform on the back of a crisis. And I remember I wasn't in ICRI at that time, but there was a meeting of the WTO in one of the 5-star hotels in Delhi. And we were discussing, I think the former DG of WTO was there. And there were these people with hooded masks that came, and they were in the room, and they were representing a consumer group. And they were representing, I think, not just a very fringe group, but a very, very large group. So the point of this story, or the moral of this story, is that I think what has happened in countries like India, with large populations and with a fair amount of inequality, is that the benefits, it's not that, and I think I said it, and Amitabh has also said this, that trade benefits, there's no question about that. I mean, why would you trade if there is no benefit? Voluntary trade is beneficial. But I think what's happened with trade is that the benefits of that trade have been largely unequally divided in the population. And of course, there's been a political economy of the Mansur-Olson kind, where big groups are able to mobilize and diverse groups find it difficult to mobilize and therefore get their interests covered. But let me try and address your point in some sort of a quasi-academic way, which is the distribution of those gains. So what Deepshikha and Sameer talked about in the beginning about Brexit and about the United States not wanting to get into TPP and the current conundrum with protectionism, I think its roots are, apart from the Chinese growth in AI and data, I think the roots lie in the fact that the benefits of trade have largely been unequally distributed and inequality has been growing. Some of that inequality could be blamed on trade and on globalization, but I don't think you can blame all inequality. For example, in the United States, if the pay of the CEO is 300 times the pay of a median worker in an ordinary corporation, that is in financial services, etc. So 300:1 is the pay differential between the CEO and the median worker. And then it's quite facile to say, Shubhamoy, that is because of globalization or that is because of trade. Maybe partly, but partly it could be just your internal dynamics and internal legislations on the financial sector. So the point I'm making is that some of the inequality of trade, some of the inequality within countries has been blamed on trade and globalization because it is so visible and out there and in your face, because the multinationals are very prominent and the multinational pay gets sort of popular in the media. But a lot of the inequality is also structural in nature. The kind of labor markets that we have, the contractual versus informal, the formal versus the informal, and no social security, etc. But the dominant view seems to be, and of course, skills and education contribute to inequality. But one of the views tends to be that inequality is driven by globalization and trade, and therefore political parties don't find it expedient to be able to then support trade, because then you're supporting the elite or you're supporting the rich, help the rich getting richer. The other structural problems of inequality, the labor markets and the skilling, etc., that I spoke about, often tend to get ignored in this debate. And of course, the tax regime also is a contributor to the inequality.
Dr. Kathuria, we have to wind up. Dr. Sanjay, yeah, so if you could just...
But I would want to hear Amitendu also on this question as well. Thank you, Deepshik.
Yeah.
Shubhamoy, just I'll be brief, stick to the politics part of it. Across the world, there are sufficient examples of industries being backed by political lobbies, lobbying with their respective governments to engage with other governments for getting them preferential access into those markets. The dairy industry globally is one of the largest examples. The US dairy industry, the Canadian dairy industry, the Asia-Pacific dairy industry, and a large number of cases. Now, in India's case, I think we have not seen that combination of domestic political lobby coming into conjunction with industry and businesses to forge a common interest that would see them pushing the government hard into getting them access into other markets. It's happened the other way around. Domestic industry has found a niche to work with domestic political lobby to preserve protection. And this is bound to happen as long as exports remain relatively insignificant in a scheme of things and priority of things, as opposed to the interest of domestic industry. I'll just share a very simple statistic on this regard. India's manufacturing is 15% of its GDP. Why does India's trade negotiation comprise 80% of discussion only on tariffs? Why doesn't the discussion focus on services, which is 55 to 60% of India's GDP? Admittedly, a large part of it is domestic market, but there is a significant part of it which is globally integrated. Why doesn't its interests ever pitch up in a manner which forces the government to negotiate hard, and not in terms of sending people abroad? Sending people abroad is something which nobody is going to agree to. India is not going to agree to have people come from outside and work in its markets, and vice versa. Why not work on investments? Why not pick up those champions which already exist instead of trying to create new champions? We have the TCS, we have the Tatas, we have the Mahindras, we have the Wipros who have gone on set. Bring them up front into a space of negotiation, and they can actually contribute a positive offensive export agenda, which would subscribe to the greater economic needs of a large part of the Indian economy.
Thank you, Dr. Palit. Just to sum up, from what the key takeaway from this discussion, we need to engage. We need to look at agreements. We need to advance our trade engagement with the world, not just trade, but a complete package. It could be any kind of agreement with us. And we do not wait for the domestic reforms to sort of engage on trade agreement front. Shumoy, would you like to sort of conclude by saying, so thank you so much, Dr. Kathuria and Dr. Palit, for joining us this afternoon. It was great having you. Dr. Danjal, yeah, over to you.
Thank you so much.
Thank you so much, Deepshikha, for very efficiently steering the discussion and arriving at certain conclusions. There are quite a number of good takeaways from here. Thank you very much, Dr. Palit, Dr. Kathuria, as well as Shubhamoy, for joining us. Deepshikha, thank you so much.